That means the trades are devised on specific days. There is a trade for Monday, separate for Tuesday, separate for Wednesday, separate for Thursday, separate for Friday. So on Monday when Ganpati was there, Monday gone. Now the next day you will use only the Tuesday's rules. You can't use Monday's rules. Understand? So it is specific for the day. We also have weekend trades and trades for the last Thursday of the month, which is the expiry day of the future series, and the last Friday of the month, which is the first day of the new series. You know what is the future series? Anybody? Yeah, the futures expiry of each month is not coinciding with the calendar month. It is the last Thursday of the month, and so like this month it might be on September 26th or 27th. 29. This time it is 29, but it can happen on 24th, 25th also. Okay? So I have got 8 trades, 5 trades for 5 days of the week, then 1 trade for the weekend, and 1 trade for first day of expiry and last day of expiry. Now what are options? My system is using options. So do you know what is option? Any of you? Means it is a derivative of the Nifty. Derivative means what? It derives its value from the underlying, which is the Nifty. Spot. The spot level of the Nifty is the asset or the underlying, and the option derives its value. Now simply put, let us assume that this gentleman has a house which he wants to sell. Okay? I want to buy. We come in a contract. I say that I want to buy a house for 1 crore. Okay? Decision. So, but I say that I don't have 1 crore right now. My FD is going to mature within a little time. That time I'll give you the money. So he and I enter into a contract. The contract is he will not sell the house for 1 month to anybody else. Right? He'll only sell it to me. From the 1st of October to 30th of October, he will wait for me. But he will not sell it to anybody. The price is fixed 1 crore. Now he says, if I'm going to wait, you need to pay me some token amount. So I said, okay, I'll give you 10 lakh rupees as a token. That's the premium. Now what can happen? 2 things can happen. At the end of 1 month, I feel that for some reason, I'm not able to manage that money. Okay? So I say, I can't give you that 1 crore. I forfeit that token amount of 10 lakhs. That is my loss. So, what we have done is, I have bought a call option on the house. So the call option has a strike price. In this case it is 1 crore. Or on the Nifty the strike prices will be the levels or 86, 86.50, 87, 87.50, 88, 88. Every 50 points there is a strike. So you can buy any one strike nearest to the level of Nifty. For example, right now the level of Nifty is how much? 8,800. 8870 crore. So 8850 is the nearest to 8870. Correct? So that is known as near the money option. If you buy a 8900 option, it is above 8870. It's called out of the money. And if you buy 8700, it is called in the money. So you have in the money, at the money, and out of the money. Okay? These are the 3 options. Now, what can happen at the end of 1 year? I mean at the end of 1 month, 2 things can happen. The price of real estate goes up and the 1 crore house now becomes 2 crores. Right? So what do? I give him the remaining 90 lakhs, take the house for 1 crore, sell it to him for 2 crores. What did I do? For an investment of 10 lakhs, I have made a profit of 1 crore means 90 lakh profit. What it means is, my loss is limited to 10 lakhs. My loss is limited to, but my profit is unlimited. Ulta, what did he lose? He lost 90 lakhs for gaining a token of 10 lakhs. So his loss is unlimited, profit is limited to the premium he collects. So this is a call option. The reverse is put option. Put is the right to sell. Call is the right to buy. Okay? So my system uses options and how it helps to trade the Nifty. Now if you are feeling bullish, what are the things you can do? You can go long on the futures, you can buy a call option, or the opposite of this, buy, sell, call, put. So buying a call option or selling a put option are both bullish positions as well as going long on the futures. Similarly, bearish is you can go short on the futures, you can buy a put option or you can sell a call option. Right? These are the ways in which you can express your thinking. If you are feeling bullish, you can do these three things. If you are feeling bearish, you can do these three things. Money management, we will teach you how to use your available funds in the best possible way so that you minimize your loss and maximize your profit. And main thing is safety. So you must always use stops. We will teach you how to use stops. What kind of stops? Planning for disaster. Always think, what if the trade were to go wrong? What will you do? How to salvage a losing trade? How to do this? How to hedge your position or reverse your trade, and when to do this? And the psychology of loss in trading. Discipline. These are all important things. Money management, psychology of loss, and discipline. Do your homework, which will teach you this entire system you have to follow each time you trade, and follow the rules scrupulously. Always use a stop loss. Okay? Level of stop. There are, in my system, there is a statistical study which I have done for the Nifty. So there are certain things in my system which cannot be done for the other stocks. Some rules can be applied, but the entire system cannot be applied because it is dedicated to the study of Nifty. But that's what I'm trying to tell you. Why do you want to trade 10 stocks? You can trade the Nifty.
If I'm not interested in Nifty.
Partially. Because I will be teaching you certain setups also which you can use for stocks. And some rules are applicable to stocks. But there are two parts to this system. One part is the theoretical part and one part is the actual statistical levels. You understand? So the actual statistical level, whether to make you Nifty or whether to make you XYZ stock, how does it matter?
Some of my personal reason I don't want Nifty.
What is that?
For my personal reason I don't want Nifty. I want to trade in some other stocks.
In that case, you can't use the entire system. Because
it does work. I have used
we have also used, now we have developed the software also. Yeah.
Monday is Friday. So the setup which is applicable for Wednesday, it will be applicable only for Wednesday.
Yes, so if Wednesday is a holiday, then that setup trade for Monday. Tuesday's rules for Tuesday and so on. Which you will not be able to do for the individual stock. There are two parts. One is a theoretical basis of the system and certain setups which you can use for anything. And then there is the rules which are specifically done because of the statistical study, which gives you the exact levels, which is a statistical study. Okay, on Monday Nifty moved how much? All Mondays how much it moved? Did it move 100 points, 200 points? Now that I don't know how much blanks moved. Got it? So if I know that all Mondays the maximum movement of Nifty can be so much, then I can give you the exact, you can more or less get the exact level of where the high is, so you know when to exit if you're long. And if it's falling, then you know the exact level when to exit your short. Keep using, it is a reference book because the rules for that, rules are for
General rules.
the rules and the levels, how to calculate for the particular day is given in that. Tell you whether you should be trading or not trading. First thing, if you are going to trade, it will tell you when to enter, what is the stop loss, and when to exit.
So Monday seminar.
Yeah. What? Yeah, that will be taught, no? That I will teach you in the seminar. Yeah. The whole day. Yeah, it takes a full day to teach that. No. You can use it for futures also. I am recommending options. See, he told me when I started this that my potential client is a retail investor who can maybe put 50,000 in the market. If you are going to put 50,000, you are not going to get any futures lots, right? By money management, I am saying that you are to use only 15,000 for a trade. Now, average premium for an option in Nifty is 100 rupees. So, if you buy 2 lots, you will be investing 15,000. Correct? That too for one day only, because you have to exit by the end of the day, as per the rules of day trading. So, if you are going to invest, if you are going to use it for futures, you will have to invest maybe 3-4 lakh rupees. You can use it for futures. It doesn't mean that you cannot use it for futures, provided you are going to put more money in the market. Because one futures lot, if I am not wrong, the premium is around 50,000, 40 or 50,000. So if you have to buy 2 lots, you have to put 1 lakh margin. So 1/3 of that, that means 3 lakhs you have to invest. Use 1 lakh for a trade. That's the way it is.
So you can
Again, a derivative of Nifty, and it will be either at a premium or a discount. Generally, the futures is at a premium. The futures price is the price that starts at the beginning of the series and then ends at the end of the series, and it will come towards the spot. Right now, the premium is 30 points. That means if the Nifty is at 8870, the futures will be somewhere around 8,900. But on the last day, the futures will come towards the spot, and the premium will contract and become 0. And the futures and spot will come together at the end of the futures series. Right? So the futures is a lot size. Means you can't buy one Nifty. You have to buy one lot. The approximate value of which is around 6 to 7 lakh rupees. So one lot of Nifty is 75 Nifties. So 75 into 8870 is the value of one contract. Based on that contract, 8 to 10% of that is the margin you pay to the exchange to hold the Nifty. Now, in case of Nifty, you can only do either futures or options, because there is nothing like Nifty spot. You can buy Nifty Bs, but there is nothing like you can buy Reliance in the equity market. You can buy Reliance ka shares. You can't buy Nifty. So to trade the Nifty or invest in the Nifty, either you can buy the Nifty ETF. You must have seen that, exchange traded fund, or you have to buy or trade in futures. Okay. The futures basically is a contract again. It's a contract, it's an exchange traded contract between two parties, saying that at a future price, at 1 month in future, I will buy or sell the Nifty with the other party. But in our country, all futures contracts are cash settled. Otherwise, futures actually came from the commodity market. For example, if I am a manufacturer of textiles, and I want to sell a shirt of cotton at a particular price, I need to know that I have a steady supply of cotton through the year at a particular price. So I go to the farmer and say, for 1 year you supply me cotton at this price, whatever the price outside. So that way what I do is I ensure that I get a supply of cotton at a particular price, correct? So that then I know that this is my input cost. When I put value to that, convert it into a shirt, what is the price I sell it to the customer? But suppose I don't do this, and suddenly in 2 months there is bad rainfall and the cotton crop fails, cotton prices go up suddenly, I am likely to lose money, because then I have to buy the price at which it is available, right? But suppose there is a good monsoon and cotton prices fall, but still, because I have entered into a contract, I will buy cotton at a higher rate. But the advantage of that is I am ensured that through the entire 1 year period, I will get cotton at a particular price. This is actually the role of futures. This is the role of futures. But here we are using futures as a derivative and trading it. Because you can't sell Reliance in stock. So if you feel Reliance is going to come down, how will you use that information to make money? You can sell the Reliance futures and you can carry it till the end of the month. Or you can buy a put option in Reliance. Or in Nifty, if you feel Nifty is going to come down, you can sell the futures. You can't sell in the cash side. You can sell it in the derivative side. So you can trade both ways. So you don't have to bother whether the Nifty is going up or it is going down. Both ways you can make money, provided you know when to buy and when to sell. Anybody else? Yeah.
And we can come to the long-term trend also. What is the trend?
No. This is, I told you, it's for day trading. No. See, I can take a class on technical analysis.
Not
long-term trend is for technical analysis. I am telling you my system is designed for day trading. Only means if you see the statistics, 90% of the volume generated is day trading. Everybody says they don't trade, but everybody does day trading, but they don't admit it. That's all. Everybody does day trading. Otherwise, how can the volume be generated? It's like saying that we are scared of sex, but we have got the maximum population. कहाँ से आते बच्चे? Correct, na? If we are having so many deliveries every day in every hospital, so many people are active sexually, otherwise they won't get babies. Like that, if the volume says if there is 1 lakh crore turnover, out of that 90,000 crores is day trade, only 10,000 crores in the cash market. What is that? What is that 90,000 figure? That is day trading. Whether you buy a stock in the cash and sell it at the end of the day, or you buy a derivative, your day